Good morning everyone, welcome to the official YouTube channel of Officers 24/7. My name is Amanjot and today we are going to discuss the MCQ on principle and practices of banking. And this is our 14th class which is related to the MCQ session of principle and practices of banking. Okay, before starting the session, let me know am I audible to all of you, and the PPT is also visible. Okay, let me know am I audible. Yes, everything is okay. So let's start with the term of the day. What was the term of the day which we have discussed in the class 13th? So first of all, if you are new to the channel and or you are seeing the series for the first time, then do subscribe the channel and press the bell icon so that you will be notified with all the upcoming sessions on Officers 24/7. And if you are new to the session is continuing from Monday to Saturday. The session remains Monday to Saturday at 6:15 p.m. AM, and you will find the playlist of PPB MCQs in English medium at the Officers 24/7 channel. Okay, now next is, if you have not downloaded the 24/7 application, do download the application. You will get quizzes here to practice your sessions. Okay, now what was the term of the day which we have to discuss today? That is LEI. Now what does LEI stands for? It is a legal entity identifier. Now it is also important that you are covering the terms also, covering the terminologies also, because abbreviations are also asked. In abbreviations form they can ask what does LEI stands for or what does LEI. So you have to know that who needs a legal entity identifier, what is legal entity identifier, how many digits are there in this particular number, and who issues these numbers. Okay, so you need to remember all these things. So first of all, it stands for legal entity identifier. Legal entity identifier. Now this legal entity identifier is mandatory. It is mandatory for what? For transactions. Mandatory for transactions in interest rates, interest rate forex, and credit derivative market. Okay, what is LEI? LEI stands for legal entity identifier. This legal entity identifier is mandatory for all the transactions which are happening in interest rate, forex, and credit derivative market. So Reserve Bank of India also made LEI compulsory. RBI has made LEI compulsory. RBI has made LEI compulsory for companies and organization having aggregate fund-based and non-fund based exposure of credit over 50 crores. Over 50 crores. So what is LEI stands for? LEI is legal entity identifier. This code is mandatory for the transactions in interest rate, in the forex, in the credit derivative market. Okay, but when it comes to the banking system, who made it mandatory? RBI made it mandatory. RBI made it LEI compulsory for those companies and organizations which are having aggregate fund based and non-fund based exposure of credit over 50 crores. So this is mandatory for all these companies and organizations. Who made it mandatory? Reserve Bank of India made it mandatory. Okay, So now legal entity identifier is a 20, it is a 20 character alphanumeric code. Alphanumeric code. So what is LEI? LEI is 20 digits or 20 characters alphanumeric code, which is based on the ISO standard. Okay, and who developed this? It was developed by ISO, International Organization. It is developed by International Organization of Standardization. Okay, so who developed this code? This code is developed by ISO. What is ISO? International Organization for Standardization. So LEI is 20 character alphanumeric code, which is developed by International Organization for Standardization. RBI made is very mandatory that whenever a company or organization getting a credit exposure of more than 20 crores, sorry 50 crores, then they have to be issued by LEI code. Okay, this legal entity identifier number is going to help the bankers, it's going to help the lenders to identify that how many loans are recovered or how many not recovered. So simply legal entity identifier will be issued to the corporates who are having loan or who are having credit exposure. It will be issued by ISO. It is mandatory by Reserve Bank of India. Okay. Yeah, so this is related to the legal entity identifier. I hope my voice is clear to all of you. You are able to understand what I am saying. Let me know. My voice is okay to all of you. I'm having a certain throat infection. So let me know, am I clearly audible or not, or are you able to understand what I'm saying or not? Okay. We have discussed term of the day, that is LEI. Remember the full form, remember who made it mandatory, where it is used, and it is of how many characters, and who developed this LEI. Okay, now let's move forward to the next question. Let's start with the first question, which is asking about that which of the following statement is correct regarding the P notes. What is P notes? It is participatory notes. P notes are participatory notes. Okay, P notes stands for participatory notes. Clear? Now what is participatory notes? What they are asking, that P notes are issued by registered foreign institutional investors to overseas investor. And second statement is saying P notes are not used within the country. So what will be the right answer? Only one, only two, neither one or two, both one and two? We are asking about the correct statement which is related to participatory notes. A, B, C, D. What will be right answer? So whenever a foreign investor wants to invest in Indian securities without registering himself or herself with Securities Board of India, then they will purchase the participatory notes from the brokers. Okay, from whom? From the brokers they will purchase the participatory notes. These participatory notes are the security of a particular Indian company or any other country's company. Only one is true. Why not only two? Two is not true. Why two is not true? P notes are not used within the country. It is not true. Whenever we are talking about P notes, let's see what is P notes. There is an Indian company. There is an Indian company, and there we have a foreign investor. Foreign investor. Now this investor wants to invest in Indian security but without registration. This investor do not want to register himself. Then what this investor will do? It will go to the Indian based broker. Indian based broker, and this broker will be your foreign institutional investor. Now this broker will purchase the shares of an Indian company and sell these shares to the foreign investors, or we can say this will become the P notes. So whenever we are talking about P notes, we are selling P notes to the foreign investor who is going to be in the another country as ours. Okay, so the right answer will be both are true. P notes are not used within the country. It will issue to the foreign investor. It will issue to the overseas investors who wants to invest in Indian security but without registering themselves. Okay, so right answer will be D option, both 1 and 2. Next, on how many pillars is the Basel II framework based? So how many pillars was introduced in the Basel II norms? Is it 4, 3, 2 or 5? When we are talking about Basel norms was given by Basel Committee. Now what is Basel Committee on Banking Supervision? Basel Committee provides international regulations on banking. So international banking regulation is provided by Basel Committee. The Basel Committee helps to maintain the overall regulations of global banks at the same level, okay, at the same situation. So the Basel Committee on Banking Supervision provided us a certain regulations which are followed internationally. Okay, these regulations are followed internationally. Now when it comes to the Basel Committee has provided 3 Basel norms: Basel 1, Basel 2 and Basel 3. But when it comes to the Basel 2, it has 3 pillars. Very good. So right answer will be your C option, that is 3 pillars. First is minimum capital requirement. First is minimum capital requirement. Second is supervisory review process. Supervisory review process. And third is market discipline. Third is market discipline. So these are the 3 pillars which is based on Basel II: minimum capital requirement, supervisory review process, and the last is market discipline. Okay, these are the 3 pillars of Basel II. Next, the Bankers Fair Practice Code was brought in 2004 by which of the following organization? By Reserve Bank of India, by Indian Banks Association, by Banking Courts and Standard Board of India, or Government of India? What will be the right answer for the third question? We are talking about Bankers Fair Practice Code. It was bought in the year 2004 by which of the following? Do mention the question number also when you are answering the question, okay? And those candidates who are live in the session, do like the session, or also share with your friends and colleagues who are also preparing for June 2022 exam. Okay? Now, what will be the answer for the third question? The right answer will be Indian Banks Association, not BCSBI. It is provided by Indian Banks Association. BCSBI didn't provided that. Okay, the right answer will be Indian Banks Association. Now, as per Prevention of Money Laundering Act, the banks are required to maintain record of transactions for period of dash from date of cessation of the transaction. So how many transaction, for how many years of transaction banks need to maintain record of transactions? as per the Prevention of Money Laundering Act? Is it 2 years, 5 years, 10 years, or 20 years? If you're talking about money laundering, what is money laundering? Money laundering is simply conversion of black money into white money. Conversion of black money into white money is known as money laundering. So conversion of black money into white money is known as your money laundering, and this money laundering has 3 stages. The first stage is placement. The second stage is layering. The third stage is integration. So these are the 3 stages by which the black money will be converted into white money, and this process is known as money laundering. Okay, this conversion is known as money laundering. Okay, correct. The years is 5 years, that is B option. So whenever we are talking about Prevention of Money Laundering Act, that act came into year 2002. So according to Prevention of Money Laundering Act 2002, banks are required to maintain record of transaction for the period of 5 years from the date of cessation of the transaction. Okay, so the right answer will be your B option, that is 5 years. Correct. Next, who are retail investors? Who are retail investors? Is it who invest up to 1 lakh, who invest up to 5 lakh, who invest up to 50,000, or who invest up to 2 lakh? So which of the following is a real retail investor? What will be the right answer? Who invest up to 5 lakh? Okay. Ananta is saying B. What about rest? We are talking about retail investors. Who are retail investors? Retail investors are the investor who invest up to 2 lakh. Not 5 lakh, up to 2 lakh. Okay, so right answer will be your D option. That is, the retail investors are the investor who invest up to 2 lakh. Okay, now, which of the following is correct? Which of the following statement is correct? We are asking. The central bank has the duty to see the legitimate credit requirements are met. RBI check the credit is not used for unproductive and speculative purposes. RBI rightly calls its credit policy as one of the controlled expansion, or all of the above. Which of the following is correct? If this C, okay, it means RBI rightly calls its credit policy as one of controlled expansion. Okay, it is saying 5. Okay, the C option is answered. Correct. Let's check what is the right answer. 6 is D, and Ananta is saying okay. So first of all, if we are talking about the central bank has the duty to see the legitimate credit requirements are met. That is true. This is the duty of Reserve Bank of India. Now RBI check that the credit is not used for unproductive or speculative purposes. That is also true. This is the duty of Reserve Bank of India to check that whatever fund or whatever credit supply is in the market, it is not used for the unproductive or speculative purposes. Now RBI rightly calls its credit policy as one of the controlled expansion. That is true. The right answer will be D, all of the above. The right answer will be D, that is all of the above. Okay, next. So RBI on behalf of government issues MSS bonds to mop up extra liquidity from the market. Whenever we are talking about market stabilization scheme, under this scheme, RBI issue government schemes, government securities in the market to mop up with the extra liquidity. So whenever there is an extra liquidity, RBI issues government security in the market and absorb that liquidity from the market. So RBI issues MSS bond on behalf of government to mop up with the extra liquidity which is present in the market. Now this is the same as open market operation. Same will happen in open market operation, that RBI will sell securities to mop up the extra liquidity from the market, but has a significant difference. What difference they will have? So in MSS and open market operation, whenever we are talking about, in both what we are doing, we are selling government securities, selling and purchasing government securities to maintain liquidity of the market. So what we are doing the same thing in both the instruments, but there is a single difference between these two. What difference is that? So first statement is saying money raised from the market by MSS bond is stored in government's normal account. Second is saying money is not raised by MSS bond. Third is saying money raised from market by MSS bond is stored in a separate account known as MSS account, which cannot be used for normal government expenditure. Now what will be the right option? What is the difference between MSS and open market operation? So MSS and open market operation both are the indirect instrument of monetary policy, in which Reserve Bank of India sell and purchase government securities to maintain liquidity of the market on behalf of Government of India. The right answer will be here C option, that is said that the money which is raised by the MSS bond. What is the difference between MSS and OMO? So the money which we are raising by the MSS bond from the market will have to maintain in a separate account of Government of India, which is known as MSS account. But nothing like this will happen in the open market operation. Okay, in open market operation, we do not have a separate account. We maintain government's reserve in the reserves of Government of India maintained by Reserve Bank of India. But when it comes to MSS, in MSS we will have a separate account, and in which the money raised from MSS bonds will be maintained, and it will not be used for the normal government expenditures. Correct? So right answer will be C option. Next, what will be the impact on economy if RBI increases CRR? What will be the impact on economy if RBI increases CRR? Now what does CRR stands for? CRR is cash reserve ratio. What is CRR? CRR is cash reserve ratio. The first option is saying credit creation increases, loan becomes cheaper. Second is saying credit creation decreases, loan become costlier. Third is saying credit creation increases, loan becomes costlier. Fourth is saying credit creation decreases, loan becomes cheaper. Now what will be the impact when RBI is increasing CRR? Let's discuss what will be the impact. First of all, we are saying that RBI is increasing CRR. It means banks have to maintain more reserves with Reserve Bank of India in form of cash, because we know what is CRR, cash reserve ratio, under which all the scheduled commercial banks have to maintain reserve as a percentage of NDTL in form of cash with Reserve Bank of India, right? So here what we are saying that whenever the RBI is increasing CRR, banks have to maintain more reserves with RBI. When banks have to maintain more reserves with RBI, they will be with less liquidity available. The liquidity for bank will be less because they have maintained reserve with Reserve Bank of India. Now when the liquidity is less in the market, the loan availability will also decreases, because when the bank do not have cash, so what will be happen? Bank will provide less loan to the market. When bank is giving loan, less loan, it means the credit supply which is given in the market is less. So the first thing is clear to all of you that the credit creation will decrease. It means credit supply will decrease in the market because bank do not have sufficient money to provide loan. So it can be B option or it can be D option. One of these can be the right, because in A and C we are saying increase, it will not be the right answer. It can be B or D, right? Now, when the credit supply decreases, it means the banks are providing less loan. Okay, and when banks are providing less loan, what will happen? Banks will charge more lending rates, because RBI has made the tight monetary policy in which RBI increases the policy rates or reserve ratios. So RBI has increased the policy, the loans become costlier. So right answer will be your B option. B will be our right option, that credit creation decreases because banks are remain with the less liquidity, and loans will become costlier because bank will charge high rate of interest on the loan. So the right answer for the 8th question will be B. Correct? Now next. RBI entrusted with the 21 members Central Board of Directors. How many Central Board of Directors are there for RBI? There are 21 Central Board of Directors of RBI. Okay? How many? 21. Maximum 21 Board of Directors can be there. Okay? Now, which of the following statement are correct regarding Central Board of Directors of RBI? What will be the right answer? So RBI has 21 Central Board of Directors. So which of the following statement is or are correct regarding Central Board of RBI? So first is saying it will have one governor, it will have 2 members from local boards, it will have 4 members from Finance Ministry, it will have 10 members who are nominated by Government of India, and 4 deputy governors. So which of the following is true regarding the Central Board of Directors of Reserve Bank of India? See, whenever we are talking about RBI Central Board of Directors, maximum 21 member can be there. Out of 21, 1 will be our governor, 4 will be our deputy governor, 4 members will be of our deputy governor, 4 members comes from the local boards of Reserve Bank of India, which are in the Delhi, Mumbai, Chennai, Kolkata. Then 2 members comes from the Ministry of Finance, and the last 10 members are nominated by Government of India. Nominated by Government of India. So these are the total 21 Board of Directors of Reserve Bank of India. So here we are saying that 2 members will come from local board. That is not true. 4 members from Finance Ministry, not true. 1 governor is true. 4 deputy governors is true, and 10 members will be nominated by Government of India is true. So A, D and E will be the right answer. The right answer will be your B option. A, D, E. It means B option will be our right answer. Okay. Now, next question is, which is not a function of Reserve Bank of India? So which of the following is not a function of Reserve Bank of India? Another, there is already a Telegram channel where you can ask your doubt. Okay. You can search by my name, that is Amanjot Kaur. You can search by the name Amanjot Kaur, you will find the channel. And do join the discussion group after joining the channel. Okay, and in discussion group, you will be able to ask your doubts. Now, what will be the right answer for the question number 10th? Holding cash reserves of all commercial bank and make available financial accommodation to them. Second is saying assuming responsibility of banking operation of government. Next is saying assuming the responsibility of the statistical analysis of data related to macroeconomy of India, assuming the responsibility to meet directly or indirectly all reasonable demand for accommodation. Now, which of the following is not a function of RBI? Now, let me know. It will be the right answer for the 10th question. So RBI is the central bank of our country. What are the function of RBI? We have discussed. Banker to the banks, banker to the government of India, lending of last resort, regulator of NP and KYC, manager of foreign exchange reserve. All these are the functions of Reserve Bank of India. But when it comes to out of these three, which is not a function of Reserve Bank of India, first, holding cash reserves of commercial bank, RBI holds cash reserve under CRR and make them available financial accommodation. Yes, RBI is the lender of last resort. This is a function of RBI. Now, assuming responsibility of all banking operations of the government, when we are talking about government's banking operation, is it responsibility of RBI? Yes, because RBI is the agent for Government of India. RBI works as an agent of Government of India. That is true. Now, assuming the responsibility of the statistical analysis of data related to macroeconomy of India. Now, this is done by NSO, National Statistics Office, which is the one wing of Ministry of Statistics and Program Implementation. This is the task of National Statistics Office, which was earlier done by CSO, Central Statistical Office. The right answer for this question will be C option, that statistical analysis of data related to macroeconomy is not done by Reserve Bank of India, but it is done by National Statistics Office. Okay. Now, next, which is your next term for the day? The term of the day will be arbitrage. Now, arbitrage is related to our investment market. Now, what actually arbitrage means? It's a kind of benefit which an investor can have. So, you have to read that what is arbitrage. Okay. So, out of 10, how much you have done correct? Out of 10, how much you have done correct? So, at the last, those candidates who are live in the session, do like the session and also share the session with your colleagues who are preparing for JAIIB June target and not able to join the sessions at the 6:15 AM. Okay. So, the term of the day is arbitrage. And next thing, if you are new to the channel, do subscribe the channel and press the bell icon so that you will get all the upcoming sessions notification. Okay. And do download the Adda 24/7 application for your practice. Now, English medium batch started from 16th of April, in which all the 3 subjects classes, which is PPB, AFB and LRB is running. So, those candidates who have not enrolled yet or who have not thought yet that how to prepare for the JAIIB June target, so you can join this particular batch. You can watch, you can see at Adda 24/7 application what are the study plan we have provided you, that how we are going to cover the syllabus of all these subjects. And this batch is with the Macmillan books. So if you are you want to read the books also to know the understanding, to know the basic understanding and overall understanding of the topics, so you can read with the books also. Okay, so books are also available in this particular batch. So to enroll in this particular batch, you can use Y496 code, at which you will get 77% off. And if you buy this particular product from Adda 24/7 application, you will get 78% discount on the price of each and every product which is available on Adda 24/7 Officers Adda platform. Okay, so this is all for today. Let's end session here. Yeah, this time will be continued from now onwards. Okay, so now onwards 6:15 AM will be the time of our session. It will be continued. Okay, so thank you all for joining the session and stay safe.